let's get a sense now. We've got Jay Powell deciding on rates,
Yes.
but at the moment, central banks are in a very precarious position, if you will. How would you characterize how, let's say, developed central banks to begin with, how the conundrum they're facing?
Well, I think the right way to putting it is precisely conundrum. I don't think central banks per se are in a precarious situation. I think the central banks have been doing pretty well in the last decade, 11, 12 years. I think they have been essential to allow for the progress out of the global financial crisis. I mean, the fact that everybody was talking about central banks being the only game in town is absolutely true. Now, that has come with its benefits, but also its costs. I think the benefits has been the recovery, has been a speedy recovery, sustainable recovery. But at the same time, there are some issues that have been appearing along. Some of it is the search for yield, it's very low rates of interest, and at the same time, probably not the appropriate accompaniment of other policies with monetary policy to generate faster growth. The real conundrum that monetary policy faces right now is that monetary policy has been tremendously accommodative. We are at very low rates of interest, a lot of search for yield, but we still are not fully there in terms of economic recovery. And therefore now...
That's it, Mr. Carstens, that's what I want to get at.
Yeah.
Can monetary policy, as it could do in the past, perhaps engender a recovery? Have they run out of options? The toolkit seems to be very bare for many of these banks, these central banks.
Yeah, I mean, I think a little bit more can be done. I mean, as a matter of fact, if you say many advanced economy central banks, they face a situation of inflation still below the objective and growth still not where it should be. But the effectiveness of monetary policy is not absolutely guaranteed. Therefore, it needs to be complemented with other policy instruments.
So those other policy instruments that you perhaps refer to would be the fiscal side of things?
Absolutely.
So tell us a little bit about how, and it varies country by country, of course, naturally, but tell me something, what type of fiscal measures would you be looking at, generally speaking? I mean, people have talked about perhaps using unconventional policies, such as helicopter money, or actually putting money into people's bank accounts. Tell me.
Well, I think, before talking about fiscal policy, I think also the elephant in the room, especially in this region, is trade policy.
I was going to come to that, yes.
If we had a different trade policy, central banks would not be pushed so much towards accommodative monetary policy, and therefore probably monetary policy wouldn't need to deplete its policy space. Now, moving to fiscal policy, I think more than anything, growth-inducing policies would be adequate. I think in many countries, infrastructure spending would be tremendously positive. I think in some countries to induce more private investment, let's say through tax policies, would be adequate. To mix fiscal and monetary policy through something like helicopter money, I don't think that is needed at this stage. As a matter of fact, I don't think we should go in that territory.
Mr. Carstens, what changed in the world, though, from central banks fighting inflation to now trying to fight deflation?
Well, basically a huge shock. The global financial crisis was huge, and it was basically global. It's the first major global crisis that we have needed to fight. There has been some coordination, probably not as good coordination as we would want to, but I think that has affected the capacity to grow of the global economy, and we haven't still fully recovered from it.
I mean, this is just it, isn't it? So that has left us here, but people said it was down to China perhaps exporting its deflation, and that's perhaps the world we live in now. How would you respond to that, and how does that dovetail into what the trade war at the moment is doing?
I think China has been tremendously positive for the global economy. I mean, if you judge it from the point of view of the consumer, the benefits that consumers have obtained around the world are really important. Also, China imports a lot of goods from the rest of the world. Usually trade it creates welfare, creates additional activity. And therefore, I think what should concern us is what is happening with the volume of trade, and not so much what is the bilateral scores between different countries. What we're seeing today is that the volume of trade is not growing, and in some months has even been falling, and that really is a very poor sign.
This is the world we live in at the moment. We have also a lot of geopolitical issues which are playing out as well, not least, of course, this trade war. We've got the Hong Kong protests right here. We've got Brexit. We've got the situation in Jammu and Kashmir. We've got, of course, these other trade tensions with South Korea and Japan. How does this all play out in the next few months?
Well, I mean, certainly some of these aspects manifest themselves in financial markets. They generate jittery attitudes in some market participants. What is concerning is that this might combine itself with some difficult economic scenarios, low growth, and in that sense, pressure for monetary policy to be more aggressive. Now, in that sense, I think central banks have to be very skillful in basically working out the adequate balance between additionally supporting economic activity, but at the same time trying to preserve financial stability. If we go too far in terms of too negative rates of interest, allowing too much search for yield, that might induce a situation where the threats of financial stability in the future might start appearing.
Mr. Carstens, do you see the world going into recession?
No. No, I mean, it has certainly slowed down. It has slowed down markedly. There are some models that show that the probability of recession has increased, but it's still far from being something sure. And as a matter of fact, other indicators, as for example the financial cycle measurements that we do at the BIS, show that we are not close to recession.
I think it was an Ernest Hemingway quote, which was two men talking, and one was bankrupt, and his friend asked him, "How did you go bankrupt?" He said, "Slowly at first, then suddenly." And that's where it can happen.
Well, I mean, you have to incorporate especially news about the financial cycle, and that's why we think that the financial cycle indicators...
But could it also be made worse with what's happening with all this cheap money around, that we also have... These chickens may come home to roost at some point because they are masking a lot of problems. You may have had investment, but if borrowing rates go up in the future, all sorts of things from governments to corporates will try and find themselves in a lot of trouble.
Yes, financial stability can become an issue in the future. At this stage, I mean, it's something that we are following up very carefully. Yes, threats are starting to appear, but they are far away from an imminent crisis. But sufficient indicators are there for authorities to start paying more attention to it.
Mr. Carstens, a final question here about central bank independence.
Yes.
Some countries, I'm not going to name them, take too long, are fearing that their independence is being eroded by the governments in place. How do you feel about that?
You know, central bank independence basically means that a set of responsibilities, policy responsibilities, have been delegated to a group of people. Now, when that authority is delegated to somebody that is not the central government, for it to really make sense, at some point some frictions need to appear. Otherwise, it's not a serious delegation. So we are now in the period where that delegation is creating frictions. Legislation usually is prepared to support the central bank when those frictions are there. My sense is that the threat to central bank independence will be serious until society doesn't want an authority in a country that will look after financial stability. And I think we're very far from there. Therefore, these frictions should be expected. I think central banks are prepared to deal with them. But I don't think their autonomy is really threatened.
Very, very, very quickly, what about these innovation hubs you're setting up in Singapore and Hong Kong?
Yes. Well, innovations hub, technology is the name of the game. Central banking needs to evolve as all the other aspects of the financial systems are evolving. We are opening here an innovation hub here in Hong Kong. We're opening one also in Singapore. A lot of very good things are happening in Asia. We want to incorporate that all in the way we do our business. And basically what we want is to create public goods in the in the technology space for the benefits of central banks and the financial system.